Welcome back to the Digital Asset Report. Bitcoin slipped below $80,000 on Thursday, with Ether hanging above $2,200. The first big news item this week is coming from the largest corporate Bitcoin holder in the world, Strategy. Strategy posted a first quarter net loss of over $12.5 billion as the mark-to-market value of its Bitcoin fell, yet the company still ended the period with over 818,000 Bitcoin. Instead, it bought 89,599 Bitcoin during Q1, and then another 56,235 Bitcoin early in Q2 of this year. What stood out on the earnings call was the shift in tone around selling Bitcoin, which Saylor has famously advocated against. Strategy leadership made clear that Strategy now sees Bitcoin sales as one option in a broader capital stack, alongside issuing MSTR and STRC, or using its $2.2 billion cash reserves. Executives said they would consider selling Bitcoin to fund dividends or reduce liabilities if that improves Bitcoin per share. They went on to suggest that they may sell some Bitcoin just to prove the model does not depend on never selling. Strategy leaders also said selling higher cost basis coins could unlock about $2.2 billion in tax benefits. That's a meaningful evolution from their old never sell posture. We'll hear directly from Saylor on this now.
You buy Bitcoin with credit, you let it appreciate, and then you sell Bitcoin to pay the dividend. And as long as you're issuing credit in excess of the break-even point, then this business works and grows forever.
In Europe, Banco Sabadell is joining the Kivalis consortium, with Bank Inter also in talks alongside ING, UniCredit, BNP, CaixaBank, and BBVA. The group is targeting a EuroPig stablecoin launched in the second half of 2026. And in Canada, the design process for domestic stablecoin rules has been underway for a while now, with implementation now looking more like mid to late 2027. This only serves to reinforce what we already know here at BitGo: stablecoins are moving further into mainstream banking and payment rails. A similar stablecoin disclosure is still shaping Washington. Compromise on stablecoin yield has reopened the path to the Clarity Act, with language that blocks rewards that function like bank deposit interest while still preserving certain usage-based rewards. At the same time, regulators are showing they are not ready to wave everything through. The SEC pushed back the launch of more than 24 prediction market ETFs as it seeks more deals on product mechanics, disclosures, and investor risk.
So I think US right now is leading in the world in terms of crypto policies. Most other countries do not have as fast as a pace and the confidence to put in crypto regulations that quickly. So we've seen the Genius Act. Clarity is being debated, but there's some minor issues there. But US is moving forward very quickly.
So the policy trend is still constructive, but the gatekeepers are asking for tighter rules around how new products reach the market. Institutional rails keep expanding outside the US as well. BNY announced a strategic collaboration with FinStreet and the ADI Foundation to deliver regulated institutional-grade digital asset custody within Abu Dhabi global market. BNY will start with BTC and ETH and later expand into stablecoins and tokenized real-world assets. Just a day earlier, Ondo, Kinexys, MasterCard, and Ripple completed a near real-time cross-border, cross-bank redemption of tokenized US treasuries by linking a public blockchain transaction with interbank settlement rails. That is exactly the kind of bridge between on-chain assets and bank infrastructure the market has been waiting for. And capital market infrastructure is on the move this week too. Institutional crypto platform Bullish agreed to acquire Equinity in a $4.2 billion transaction that would combine a regulated transfer agent with tokenized infrastructure. Equinity supports nearly 3,000 issuer clients, more than 20 million shareholders, and about $500 billion in annual payments. The stated goal of the acquisition is a global transfer agent for tokenized securities with real-time cap table visibility, automated corporate actions, 24/7 transactions, and instant settlement. This proves the real-world use case for tokenization. In the mining and infrastructure lane, Hut 8 reported Q1 results that highlighted $16.8 billion in contracted lease revenue across 2 hyperscale AI campuses. The company also locked in a 15-year, 352 megawatt lease at Beacon Point worth $9.8 billion in base term contract value. The deal shows how Bitcoin mining infrastructure has been pivoting into AI data centers. This week's pattern is hard to miss. Strategy is broadening the playbook for corporate Bitcoin treasuries. Banks are building stablecoin rails. Lawmakers are inching toward market structure rules. Tokenized treasuries are touching real bank settlement networks, and capital market firms are positioning for tokenized securities at scale. Prices are still uneven, but the financial infrastructure is accelerating. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.